Let's start out with you can share with us a little bit about your journey. What had you go from ER to real estate investing?
Yeah, absolutely. So I'd always had a passion for real estate, but was not really intelligent necessarily in what I was doing. And so starting off as a young attending and not believing as much in the typical structure of you put your money into 401ks and 457s or whatever you have access to, if you will, money jail, where you get a number of different sort of assets that you can choose from, and that's it. And then you don't get to enjoy that until you're 65. And so that always rubbed me a little bit wrong. And so my wife and I, very early on, just within a few years of me becoming an attending, started investing in long-term rentals. And so we would get a bonus, we'd buy a property, we'd get a bonus, we'd buy a property. And within 5, 6 years, we had a number of properties that we were managing. And that's really how we started. I was busy. I was a busy doc. I wanted to pay down loans, and we had absurd amounts of debt and things that we wanted to try to get rid of. And we joined a nationwide home builder. And anytime they built homes, they would have a model home, for example, but they didn't want to own the model homes. They would sell them to investors. And so the investors would buy the model homes and then they would, quote unquote, live there and use the model home to sell the community, which could be anywhere from 2 to 3 years. But that's 2 or 3 years. You don't have to deal with a tenant and you're getting monthly rent checks, which are typically above market. And so that's what we did for the first decade or so. We just aligned with builders and bought up model homes, and it made it easy to be a landlord because there was nothing to landlord. You were just collecting rent checks. So that's how we started.
That's amazing. Okay. And then part of that too, was like having the active income that you have. Did you guys try to also become a real estate professional and get the active income tax off that way as well?
Yeah, that would have been ideal and something I'm still striving to be able to do. I think I'm getting closer, but to hit those 750 magical hours where it has to be more than your day job, I'm still a full-time practicing physician. I do admin work at the hospital, and so it just becomes exceedingly difficult to be able to get reps. And definitely on the trajectory, maybe in the next couple of years, but it would be hard to get those hours, at least for what I'm doing.
I see. Okay. And so share with us a bit about how you went from the rental houses space to expanding into the syndication space and even outside of real estate into oil and gas, land, mobile home parks, and things like that. I'd love to hear your thought process around how you decide to expand, what to expand into, and such like that.
Yeah, so I think it was around 21 actually. I was doing more administrative things in the hospital. I was the chairman of my department for 8 years or so. I was the president of our medical staff, and that was my trajectory. And had a position open up, the associate chief medical officer position, which, at least for physicians, the height outside of being a CEO or something is the chief medical officer. So I thought that was my
Mm,
trajectory. Narrowed it down, came down to two people, and the person who was in the CMO position at the time sat me down and told me I didn't get it. And that was the first time I'd been told no ever, not for interviews, not for med school, not for residency, not for my job. And so it was a big gut punch, and that door, at least in my mind, closed. And I said, if not that, then what? And that's when I really started getting more and more passionate about real estate, knowing I'd always enjoyed it, but I was doing it just in one sphere and I wanted to see what else was out there. And so I took a lot of courses. I joined a number of masterminds with other physicians in real estate and then started doing things actively and happy with that, but I didn't want to add more time, more energy to the active management. And I wanted to get into passive opportunities. And so I took a course about learning about passive real estate, how you do due diligence on deals, and what it entails to try to figure out what may be palatable as a passive investor. And so immediately following that, jumped into 5 opportunities. Now we're in 22 opportunities, just my wife and I,
wow.
limited partners in a bunch of different assets. And so that's allowed us to really get educated on a variety of different things and been able to add that passive component to my active side too.
I see. That's amazing. And then along the way, like how did you got the idea or expand it into inviting friends and family to invest alongside with you?
Yeah, I think some of the opportunities that have been doing really well and performing well, I'll tell friends, I'll tell family members about, and it was very organic. They would say, "Hey, can I do that too?" I was like, "Sure, here's a phone number, here's a website. I've done my due diligence. I'm jumping in. I think it's a solid deal, but definitely check it out for yourself, see what you think." And so they would start jumping into other deals too. And then it became more and more people. I said, maybe we should talk to them about coming in cumulatively with a larger amount.
Mm,
And there's power in numbers. Can we negotiate a better term and a better deal for all of us? Because we're no longer coming in at 50K or 100K. We're coming in at a million, 2 million. And so we'd go back to our partners and sponsors and different operators and say, what does it look like if we bring you X amount? Can we get a better profit split, a nicer waterfall, whatever the case may be, so that we do a little bit better? And so that's how it started. And then it's grown over the last couple of years.
I see. I love it. Yeah. It usually happens that way, right? Very organically. And the next thing you know, a lot of friends and family wants to come along. So share with us a bit about your quote unquote buy box. What do you look for? Because you have now invested in a 20 plus 22 different assets and even outside of real estate. Give us an insight into what are you looking for? What is your investment box, investment criteria?
Yeah, so it's interesting because it's pretty widespread and it really depends on the asset. Our buy box comes from friends and family and what they're looking for. And so that's varied a little bit over the years. And we have some that also have active real estate and they want that depreciation and that passive loss through a nice negative K1 where they can write off some of their passive income. Others want reliable monthly cash flow. And so we've tried to find those opportunities. Others don't care at all about cash flow. And they're like, take this money and make it as big of a pile as quickly as you can. And that's their buy box. And so you try to find something that fits that. And then we have others who have no interest in real estate, don't want anything to do with running a short-term rental and getting that tax credit or doing anything active. They enjoy their day job, but they're just looking for some mailbox money, if you will, and some kind of a side hustle with some cash flow. But they also want to drop their taxable income and their active tax. And we can do reps, like you mentioned, to drop your active tax burden. You can do the short-term rental tax loophole and get Airbnbs up and Burbos and things, or you can do energy opportunities, which will let you offset active tax. So the only reason we did oil and gas and got into that is because we had a number of investors come and say, look, we need to drop our taxable income. And so oil and gas is a terrific way to be able to do that.
With us coming to the end of the year here, I'm sure you've gotten hit up even more than normal about people needing to offset their taxes. Is that correct?
Yeah, no, absolutely. So I think you're spot on. It's a great opportunity in the last quarter of the year. People are thinking about taxes and what they're going to have to pay this year. And so, yeah, anyone that invests in this calendar year gets that offset of their active taxes for this year, which is great. And they'll get an immediate return on investment when they get their tax return when they file that. Yeah, it's a great feeling. And it's government backed, government supported, right, by the IRS, by the tax code. And it's a nice way to have that insurance policy against a complete loss, which is what we always worry about in these deals.
And with you being a physician, are most of your investors also physicians as well?
Yeah, I would say the vast majority, probably 75 to 80%, yes. And we have other folks that'll raise with us and bring in their friends and family. We have attorneys, an economist, and other folks, a dentist that will sometimes bring in some others. But yeah, by far and away, it's physicians that'll come into our opportunities.
What and are they just purely people that you know, or have you expanded where you're more actively marketing for them?
Yeah, I think initially it was just folks that I knew and that sort of knew what I was up to. And then it's become friends of friends. And so that circle gets a little bit bigger. But you then get to a point where you have to start. I've talked to everyone I think I know. Now, who do I talk to? And is there opportunity to make that circle even larger? And that's what you're trying to figure out. But a lot of it starts very small and then grows.
And I know when you booked this call, you mentioned you've raised over $12 million yourself. And then with your partners, you guys have raised over $60 million just this year. When you are looking to expand your network and reaching out to your partners, do you also look for other physicians as potential partners? What are some of that criteria? Do you try to convert any LPs who is a like a seven-figure investor? Hey, if you're going to invest that much, you might as well come on and help raise as well. Or what is that process?
Yeah, I wish I knew some seven-figure investors. And if you know any, I'm open to conversations. But no, I think most of the we're just comfortable. I'm a physician. I'm comfortable speaking with other physicians. We speak that language. Some of them will speak the real estate language and the syndication language as well, but a lot of them don't. So we tend to be very conservative and fearful by nature. And so I think we're not very trusting of others, but we trust one another, right? And so being able to speak to another physician, have that conversation to where they understand what you're going through, some of your difficulties and your pain points, be able to relate to those, but then also say, hey, here's the opportunity, here's why we think it's good, here's the level of due diligence that we did. And never is that an excuse for not doing their own, but there's some comfort in the fact that we've spent 4.5 months deep diving into an opportunity with the sponsor with that specific deal. So I think that brings a lot of comfort. But no, I think to answer your question, not really gone outside of that community much because I don't really know a lot of other folks in other communities.
I see. One of the things that you mentioned, I'd love to dig further into it. You said that like physicians, they have a hard time trusting others. I noticed that dentists, they're a lot more entrepreneur. They seem to be more willing to take risk than physicians are. And I'm also assuming it's because you guys get hit up from a lot of different service providers and other deal sponsors and things like that. But give us insight into the minds of a physician. What does it take to win over their business? And yeah.
Yeah, no, I think that's a really good point. And I think part of that, unfortunately, is inherent in our training. And through medical school, you don't get business
Mm,
training. Nobody talks to you about putting up a shingle and setting up an operation. That's very different in dental school, where that is talked about. And running a practice is very important. Some of them offer MBA programs through dental school. My son happens to be applying to dental school right now, which is why I see this little bit of a dichotomy in training. But yeah, physicians don't get that. And we come out of medical school and we're immature and we're vulnerable and we're in residency and we don't have any financial training. And you get financial advisors and other folks that sometimes have different initiatives that they're looking for. And you're a young and available audience. And so you get roped up into financial planning that may not be as great. And I think part of what I do is, or I hope to do, is be able to tap myself on the shoulder 10 years ago and say, hey, there's this
mm,
whole world of opportunities out there where if you read about it and educate yourself, you can do really well. And so that I think is definitely super, super important to do. And I don't think I answered your question, Tim. I started going off on the dentistry thing, which I think you're spot on. I think they're very entrepreneurial, part of their training.